Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. I'm here to answer this question here. Someone asks, grand rotation. Why is Dow down 1.3%, the Nasdaq down 2.7%, but my precious metals, oil, and uranium portfolio are down 5.5%? Why are commodity companies getting hit more badly than the general stock market, despite the commodities themselves not going down? Well, that's what happens is when things are starting to rotate, they're going to dip together, and all of the commodity companies are quite volatile in comparison to the more liquid, larger uh, indexes. So if you were to look and you were to look at, say, some of the smaller technology companies, and you're taking like the huge, large indexes. So I'm going to pull up maybe some smaller companies and show you kind of the comparison there. So if we were to look at some of these smaller technology companies and software companies or whatever, here's the trade desk. Just waiting for it to pop on up. The trade desk is looking quite toppy. This is the move, and it was down 12.23%. Roku was down 9.1%. So you can't take an index like the Dow, a gigantic Nasdaq composite, U.S. composite index, down 2.72%, and compare it to a commodity company that is a small cap. You have to compare a small cap to a small cap. And something that's a small cap like the trade desk, which is still, I think, a larger, it's a 28.5 billion market cap, down 12.2%. Roku does not look good. It is getting sold off hard, down 9.1%. And it's breaking out of its channel. Now, I do think that we are in a pullback, quite obviously, in uranium, and hopefully we can find some footing at some point here. You can see all the selling pressure. It started with this day that I told everyone, I said, I don't like this right here. A sharp reversal day when we were trying to move up, it reversed, and then we had another follow-on day of a lot of selling pressure. I was like, this is a combination to go lower. And here we are heading lower. Now, hopefully, this is all it can muster and we can find some support down here. Hopefully. We'll have to see what people are doing. I would have liked it if this low could come up a lot farther and get a nice, good, fat hammer pattern, but that's not what it threw. Bannerman's got a little bit of a wick at the bottom there too. So when I read this, guys, you just have to be patient. The market is going to do what it's going to do. And right now, with technology selling off, it is getting sold, quite hard. It's not a crash. It's not like a flash crash, but I think this is going to continue for a while. And then we're going to have to decouple. Our commodities are going to have to decouple. And when they decouple, it's going to be a moonshot, because then people are going to see, they're going to physically see. People, we know, so it's like us knowing this on this channel. We know what is probably going to happen before it happens. To some extent. It's not like I'm a forecaster here. I said I think it's going to kind of come and draw everything down, and then it'll decouple, and then commodity sector will take off. But when people see that, when they see the decoupling, then I think money's going to rotate over, and they're going to do their FOMO. They're going to chase. They're going to chase performance, and I think this is going to be a long, 5-10 year bull market. However long the expansion phase of real estate and the housing starts lasts, that's your liquidity. And that's what's driving the market conditions. So when you look at why are commodities companies getting hit more badly than the general stock market, I mean, that's just people selling, and we're in small caps, and everything in the precious metals, the oil and uranium is all far smaller than the Dow and the Nasdaq. I mean, those are indices that are massive. So I would suspect that if we do have selling pressure across the board, that they're going to go down more in commodities just because of the market caps. And you want it to be that way. You want these to move quite dramatically because it makes it harder for someone who's newer to hold on because they're going to see large swings. But that's how you make all your money. You have to have the volatility for the move to the upside. Because when these things go, they're going to be up 10% day, 10% day, 10% day. It's just going to blow up to the upside when it goes. When that money locks onto our commodity stocks and flows into it, it can't handle the money flow volume. So the price has to adjust accordingly to that volume flow. And it's going to move up in astonishingly high. I said it there, guys, astonishingly high move higher. Says, other than my strongly contrarian bet on Arcana Silver, I've been out of the precious metal stocks and had money working in the oil patch. Late in the day, I sold off the one oil stock which has held up the best this week and moved money into EXK, the silver stock that was down the most. I don't like it when both sectors are down at the same time. I try to play ratios between oil and precious metal stocks the way Andy does with physical precious metals, but on a much shorter time scale. Just know, guys, if you're playing stuff on a shorter time frame, it is much, much harder to do. I play the long term. Long term being over 4, 5, 6, 7, 8, 9, 10 years, something like that. I may cost average into a position for a few years at a bottom and accumulate when it's really low. And that's when you do it. And when I was buying in 2020, I was getting the same things. Like the person who made the comment about Apple and how, us selling Apple and buying other companies, I just think that it's out of cycle. And when the money flows into commodities, they can't handle the volume of money that's going to be flowing. So they're going to move very dramatically in terms of prices. So and here's one, first inning. I think there's a rain delay to get past the first inning in uranium. Guys, uranium has gone up like 10 bagger already in some of these companies. It's already moved. I don't understand. We're already in this. We're in the beginning of this game. And that was off of the most ridiculously low valuations that we've seen. And now they're just cheap. They went from like extremely low, never seen valuations to very low valuations. So, it's pullback. We're in our first pullback and things don't go straight up. So to say something like a rain delay to get past the first inning, we're in the beginning of the game, but we've also had massive moves. URNM was like a $15 stock when it bottomed. URNM back here was like $15 or $16, and we went all the way to almost $100, about $100 up here, and we're getting a pullback. So, I mean, this is the beginning of this big old game. And what comes is just a massive move higher, I think. At some point, I can't tell you that point, but we're getting our first kind of bigger, larger pullback. First wave, third wave, and a fifth wave. And now we're going into a larger consolidation period in uranium. That's what I'm guessing, and that's what we're experiencing. Then when this consolidation's done, we go into another big leg higher. This will probably be the first leg here. And based off of this first leg, if I were to do a fib extension, if this is the first leg, and I'm just kind of guessing here, low to high, and let's say we pull back to like 55. I mean, I'm just going to give it a little bit larger, more pullback. Scroll this thing down, going up a 1.618 on a third leg would be $200 in uranium. Going to 2.618 is $300. If we get a huge move, I mean, maybe we go to 380 on the URNM. So I mean, I don't know exactly where it's going to go, and no other people don't as well. But I've heard other people talk, and they quote certain people, and they're like, "Oh, uranium only has 200 or 300% to go." Well, I think it has more than that. I think uranium, the physical price, is going to go far higher than a 2 or 3x from where it is today. Far higher. That's my opinion. And I don't think any of these other guys have any better data than I have to make that claim. If the ratios were to repeat itself, just like in history, uranium's probably going to be $multi-100. That's what I think. If it were to repeat what it did in last bull markets, we've got lots of inflation. $140 inflation adjusted is going to go far higher. Using the ratio, if gold and I don't know, guys. Like I don't listen to other people. Like you can say some other highly known person says that it only has 200 or 300%. I don't care what they say. It doesn't matter. They don't control the market. None of these people do. All I do is I use the ratios, and that's what the historical tops have been at. And to look at a historical top and say, this is the top that it could potentially have, that's a fact. Doesn't mean it will get there. But that's what, if history repeat itself, if we go to a 1-to-4 ratio on the gold, and let's say gold's at 2,500 when it hits it, or it's probably even low. Let's say it's $3,000. $3,000 divided by 4 puts you at a $750 per uranium per pound price. That's history repeating itself. It's not my projection. I'm not projecting that. I'm just telling you that history, if it were to repeat, would be around probably a 600 to 750 per pound basis. If gold's at $3,000, which is highly likely that gold gets to $3,000. So it's probably likely that uranium goes to some ridiculous amount. If uranium goes to that amount, if I just pull out a number, $500 uranium divided by, if we're at, like, I don't even know what we're at right now, 40 something dollars, let's say 45. I think uranium could easily go 11x the price of uranium. You think these little companies are going to stay where they're at? You think they're only going to do a 200 or 300% increase? I don't think so. Maybe I'm completely wrong. Maybe uranium doesn't go as high as I think. Maybe this is an anomaly, and this is going to be the smallest bull market that we've ever seen in uranium. It is going to be the weakest bull market, even though we've got the strongest fundamentals in uranium ever. But we're going to have the weakest bull market. That's what these guys are projecting, really? You think we're going to have the weakest bull market with the strongest fundamentals? I don't think so. I think we're going to blow to the upside at some point. I can't tell you when, but I can tell you when this pullback's done, and it may take another 6 months or something like that, or whatever it takes. I don't know. I don't know what this thing's going to do. What I do is I can control what my purchasing prices are, and if something's cheap, which this is cheap, I'm going to continue to cost average into it. That's my game plan, my strategy, and when the liquidity comes and finds these markets and commodities, they're not going to go up little teeny amounts. They're going to go up a lot, I think. So that's my opinion there. I think we're going to see far greater numbers out in the future, and this pullback is still here. I haven't seen a bottom yet, and I'm going to be a buyer. Continue to cost average in. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't, and thank you for listening. This is Finding Value.